The stock market has been patiently waiting for Amazon and other mega corporations to report their earnings in order to have an excuse to pump the market up further. Oddly, they disappointed, and the entire US stock market fell. This will obviously have an impact on global markets as they have been heavily reliant on good news out of the US to maintain some level of sanity. It seems like the madness will continue. You came here for the truth, so let me unveil that for you. Today we're going to look at the US market specifically. I'm going to show you all the charts, all the information that you need to know to understand what is happening. This is being recorded in the middle of the day on Friday's trading session. I wanted to give you the details as they unfold, and then I may do a video later in relation to this depending on what happens, if there's any new information. But let's take a look at this out of CNBC. S&P 500 dips into correction territory, then rebounds in yet another wild day on Wall Street. Of course, it is still in the negative as I record this message, but it is true that the market was down heavily in the morning and has come up since. We are still in the red for the day, all right? So this has been wild over the last couple weeks. The market's been going up and down, up and down. It truly is a red October. U.S. stocks fell sharply on Friday as the release of disappointing quarterly results from key tech companies overshadowed strong economy data. We're looking at the statistics that the GDP is 3.5%, and I gotta hand it to the U.S. government statistics. Always trying to brighten up everybody's day with comedy, and that's truly the best medicine. Laughter is the best medicine, okay? And you could see that upon releasing their reports, their quarterly earnings, Amazon fell 9.6%. Google's Alphabet fell 4.2%. They've come up since, no doubt, but imagine companies of this magnitude, of this size, dropping almost 10% and 4% respectively. That is massive drops in a single session, okay? And that right there shows us that the market has their finger just waiting to hit that sell button. Of course, these are all robots anyway, but that's really what's happening. A lot of individuals do not see this. They're not aware of it. They are buying the dip, and it is statistically proven that in 2018, buying the dip has been a very bad policy, all right? Other years prior to 2018, it's been a great policy since 2008, 2009, and we're looking at this being a very different year overall. This is not just in the United States. This is in emerging markets. This is in Europe. This is in Asia and everywhere around the world that you can see the same problems existing because they all stem from the U.S. Federal Reserve. That's where the problems lie. If there are problems there, there are problems everywhere else. All markets around the world are asking the Fed, please do not increase interest rates. We beg of you. And yet they're still going about that policy, and this is the effect. So the actual price of the Dow Jones and the NASDAQ and so on right now, it's going to be irrelevant by the time the video comes out. It's constantly changing. And tomorrow, if you're watching this video the day after, it's going to be even less relevant. It doesn't really matter. What I wanted to show you was this. Nearly half of the S&P 500 is in a bear market. Nearly half of the S&P 500 is down 20% or more. You have to understand the severity of the decline that is here now, not at some point in the future. This is not a blip on the screen. This is not a mistake. This is happening right now as I record this Friday's trading session in October. This is the red October that people have been calling for. And I'm just pointing out what I'm seeing. I'm showing it to you. I'm giving you the factual data. What you want to do with it, that's up to you. Now, CNBC has some financial advice for you. They always say this is hilarious. Here's where to hide out. And they try to give you their financial advice. Of course, that is bought and paid for. We're going to move on. These are the different markets in the United States, the top three that I wanted to focus on, S&P, NASDAQ, and the Dow Jones. And that shows us that they're always fluctuating, that's for sure, but they are in the red. Okay, that's all I wanted to get to for that. Looking at the Dow Jones, it's down over 100 points, but I wanted to mention, as I do in the last week as well, that in the afternoon, particularly on Friday's trading session, the plunge protection team typically comes in, or at least statistically most likely to come in the afternoon, and then even more likely to come in on a Friday afternoon and push the markets up. Whether or not they're going to push it into positive territory or just push it up, keeping it alive, the plunge protection team will be there. Okay, so that's what we're going to see. I'm going to definitely be covering this issue right now. I don't know why it would move into positive territory naturally. Today would be a day to sell if you're a trader, but hey, that's where we're at. These algorithms and everything, they're all being programmed to do what they do best. Amazon plunges into a bear market, down more than 20% from its high. You have to understand, this is one of the biggest companies in the entire world, and yet it is down 20% from its absolute peak. 20%. That is a very, very significant decline, and I wouldn't be surprised to hear how many people bought in basically at the top. Maybe they bought before, maybe they bought in 2017, maybe they bought in 2016 or even before that, but they probably also bought near that peak. And now they're down into a bear market. So a lot of people are getting screwed over at this point because they've been chasing the gains. They've been attempting to make money at the end. This is late cycle, no matter who you ask, into the tightening cycle of the Federal Reserve and other central banks around the world. And Jeff Bezos' face after he lost, I think it was something like $14 or $16 billion. And that pretty much says it all. Global stocks dropped Friday, dragged lower by lackluster technology earnings in the United States and signaling a return to the negative mood that has dominated markets for most of the week. What about the emerging markets since January? What about global systemically important banks since January? What about all of the different markets out there except for a handful of US stocks that have truly been keeping this market afloat? And that's not the case today in October of 2018. I've been showing it to you. I've been documenting these facts, this information, and it is now becoming very clear what could happen in an instant. The markets may turn around. They may print more money. They may stop reducing what they're doing with all this, easy money policies and start to hand it out again. They could do that. They could turn it around. There's no doubt. But what I'm trying to stress is the fact that these markets are a lot weaker than what we're being told. You're not going to have to worry about a 20% drop in one day. They have triggers that will ultimately be set off, and they will halt trading and get it going again. But if the market comes down 2 to 3% a day, and that happens over a series of a few weeks, that's going to result in a very, very negative impact on your portfolio. And people are not going to say, well, you know what, I'm just going to sell at that point, because they're not. They're not going to sell. They're going to think to themselves that this is a pattern that they saw. They saw this analyst on CNBC, and they told everybody, now is the time to buy. Now is the time to buy. Jim Cramer was out there telling everybody to buy. Seeking Alpha was telling you these are the new hottest 7 stocks to purchase today. And this is the kind of business that we're in, okay? All right. Looking at this, third quarter results late Thursday was the second time running that billionaire Jeff Bezos' firm had fallen short of Wall Street's lofty sales targets, and the numbers sent a shockwave reverberating through global stock markets. All right, so we're looking at nearly $90 billion being wiped off Amazon's market value. All right, so that's bringing it down quite significantly. I don't have any more details to show you on that. Just wanted to give you this update on Snapchat. Snap beat on both the top and the bottom lines, but said that his daily active users fell by 2 million. Shares fell by more than 14%, hitting a record low below $6. That's just one stock. This is a stock that people were thinking, look, I'll put some money into it. If it goes like Facebook, if it happens to be the next Instagram, then we're all good. What if it gets, some sort of company buying it out? Maybe Facebook will buy out this company as well. Maybe Google will buy it, and so on. There's a lot of talk about this and that. People were just hoping that this would be the next big thing. It's going to IPO, and suddenly everything is going to do just like Facebook did, and it would be so wonderful. But that didn't happen. In fact, it's been terrible pretty much ever since the IPO. It's now at $6. So good luck to all those people who bought it thinking that they would make a lot of money. You cannot go chasing the pot of gold at the end of the rainbow. I'm telling you right now. The hidden bear market, most S&P 500 stocks are in a correction. And that's ultimately what I was showing you there on the previous article. And it's not going to be covered. It's not going to be touched on. Just head down to the comment section of this video and you will see people that are denying the information, but it's a fact, so I don't really care. This here is not as of today's trading session, so these numbers look even worse. But this is the top left corner. You're seeing the Dow Jones, then we get to the S&P, the Nasdaq, and the Russell. All of them are below all of their moving averages, including the 200-day moving average, and now factoring in today's losses are even worse, okay? We are suffering right now in terms of the technical analysis. This isn't good. Smart Money Flow Index, which I've shown you before and highlighted in previous videos, smart money continues to get out, and it just happens to be correlated with what we saw during the financial crisis. Maybe, just maybe, that the Dow Jones is going to catch up at some point to the Smart Money Flow Index. We'll see about that. And just quickly before I end the video, stocks, Europe Banks Index. This is the most oversold it's been since the financial crisis. So yet another indicator going back into that time frame. We have to start waking up and realizing that this isn't good. Even if they get the markets going again, they print money, they reduce interest rates, they make it so easy for people to borrow, reserve requirements get thrown down to the ground, and everything, money's just flowing. Money's coming from helicopters. Helicopter Ben Bernanke is doing his work. And yet, still, the weakness will prevail. If you found this video informative, please give me a thumbs up, and give me a thumbs up. It helps to support this channel, so I do appreciate that very much. Thank you all. And I wanted to say hello to all of the new subscribers out there. We are now at 151,000 subscribers on the Money GPS YouTube channel. I want to take this channel to as high as it will go, and I want you to be there with me. If you have anything you want to share it here in the comments. I do read all the comments. I try to read as many as I possibly can. I go through them every single day. I spend time looking at the comments. I try to reply to as many. I give the thumbs up on all those comments, as many as I can. I go through them all, and I want to say thank you to each and every one of you for supporting this channel in any way that you do, whether that's through thumbs up and comments and subscribes, or whether that's through PayPal and through Patreon and so on. I want to thank all of you. I don't thank you enough, but just wanted to say that to you all. If you want the financial education you were not taught in school, these two books have it all, from everything from A to Z, the foundation, how to make money, everything you need to know in the link in the description. If you want the audiobook version instead, you can get that at themoneygps.com.